The California real estate exam evaluates your ability to recognize behaviors that harm the public. The Department of Real Estate enforces Division 4 of the Business and Professions Code to ensure all licensed activity meets strict consumer safety standards. Most license violations fall into three categories: improper handling of money, withholding required information, or general dishonesty. On difficult test scenarios, look for the red flag. Choose the answer that provides the highest level of transparency and consumer protection. Real estate law requires total separation between client trust funds and personal money. Mixing these into a single account is an illegal act called commingling. For example, placing a renter's security deposit into a personal checking account over the weekend is commingling. The public has a right to know they are communicating with a professional. Advertising a property without disclosing your license status is called blind advertising. For example, an online listing providing only a description and a cell phone number is a blind ad. The DRE penalizes this and commingling because they compromise a consumer's financial security and right to professional transparency. Within disclosure, we find dual agency. Representing both buyer and seller is legal only with informed, written consent from both. This duty extends to personal interests. If representing your sister in a purchase, you must explicitly disclose that relationship. Honesty violations are divided by timing. Misrepresentation involves lying about a past or present fact. For example, knowingly telling a buyer a 1,500 square foot house is 2,000 square feet is misrepresentation. A false promise is a lie regarding a future event. Agents must disclose every dollar earned. Earning undisclosed compensation, like a hidden kickback, is a secret profit. You cannot buy a client's listing and resell it higher without disclosing your intent to profit. Hiding any gain violates your fiduciary duty of loyalty. Modern real estate law moved away from the historical doctrine of caveat emptor, let the buyer beware. Today, the state provides a robust framework of systems designed to shield the buyer from professional misconduct. The Consumer Recovery Account serves as the final safety net for victims of fraud who cannot collect on a court judgment. The account is capped at $50,000 per transaction and $250,000 per licensee. Spotting these red flags and applying the principle of consumer protection will guide you through the most difficult scenarios on the exam.